In this video, we are going to get into what our major catalysts are for this week, how I expect them to turn out, whether or not I'm expecting a rally or some form of crash that the bears are calling for. This week is by far the most important week we've had in a long time, because this will really drive the sentiment going ahead throughout the rest of this year and into the start of 2024. This week will confirm whether or not the markets and the Fed are in alignment. This could open the door for a lot more money to come back into stocks when there is $10+ trillion of investable capital that could be in stocks that is otherwise currently not in our markets. If you're confused, we're going to get into all of this. We're also going to look at Tesla stock specifically, how this news will likely affect Tesla and where I think Tesla will go by the end of this week. It's obvious if you look at the charts. You should be expecting quite a big move this week. And I think it's going to be a good week, but we need to break that down a little bit more in depth. Take a look at the bubble chart with the options as well. What is big money expecting for this week? Are they positioning for a move higher or a move lower in Tesla stock? The work is cut out for us here in this video, so let's just go ahead and jump into it. So this week for Tesla and for interest rate sensitive names, it's going to be a huge week. Now, why that is, it's pretty simple. You're unfortunately not going to hear breakdowns like this one, clear, concise breakdowns of our markets anywhere else, likely besides this video. So that's unfortunate. So I hope you guys appreciate this. But what we've seen over the past couple of months now is markets are starting to price in a lot more rate cuts for 2024 than what the Fed previously said. The Fed said at the last summary of economic projections that we might get 1 or 2 rate cuts in 2024. Markets are now pricing in 5 rate cuts. Some of this is because some market participants are expecting a deeper slowdown, some form of recession in 2024, but that's just not happening yet. We're continuing to see inflation coming down, the economy holding up. On Friday was a very important day. You had unemployment drop from 3.9% to 3.7%. You had the payrolls, the non-farms, exceed expectations by almost 20,000 jobs. That's great news if inflation is 3%. This would have been some bad news more than likely in 2022 when inflation was way higher. So right now, there's a balance between the economy's holding up, inflation continues to fall. That is a soft landing by definition. So it looks like there's a clearer path to a soft landing now than there was before. But this week in particular, we will get a lot more clarity and confirmation about what's coming next. Now, I think it's also important to note that whether you are bearish or bullish should not come down to one data report. It's really a combination of different data reports that are painting a narrative. The narrative is more important than the data itself. So we already have the economy is holding up narrative. That's intact based on what we've seen Friday. Coming on Tuesday, we're going to get the CPI report. Now, month over month, core is expected to increase to 0.3%. That would be high. That's 3.6% annualized. That wouldn't be good. Last month, we were at 0.2%. That was 2.4% annualized on a 12-month basis. Preferably, you want to see this number come in at 0.1 or 0.2, but you don't want to see core month over month go higher from last month. That would be bad, and I'm not expecting that to happen. I think we could come in probably around 0.2% again, and that would be considered good news. Core inflation year over year is right at 4%. That's the estimate as well. I think this could come in around 3.8% based on some of the calculations that I've done privately. I'm not, that would be a way too long of a video, so we're not going to get into that. But that's what my calculations are coming to, around 3.8% month over month, or year over year. Holy crap. If that was month over month, we would be in big trouble. Year over year. Headline inflation month over month is expected to also rise from 0% last month to 0.1% in November. And year over year is expected to fall from 3.2% to 3.1%. So I think month over month inflation, the headline, really doesn't matter too much, whether we're at 0% or 0.1%. Not a big deal. You're still well under 2%. And a lot of this is dictated by food and energy, which are very volatile to begin with. Now, if the year over year inflation rate, the headline, comes in under 3%, that might be good for algorithms. I'm sure once you break into the twos, that's going to be good for your trading algorithms. They will probably buy stock if that data does come out. But long story short, you just want to see inflation continuing to fall or not getting worse. You just don't want to really see things getting worse from here or inflation rising from here. That's kind of the estimate though. So be on the lookout for that. Your month over month core probably gives us the big move for this week. Now, coming the day later on Wednesday of this week, you're going to get PPI month over month. It's highlighted in red, but it's really not going to be important. What will be important is the summary of economic projections. So this is the last summary of economic projections we got back in September. And the average Fed official expected the federal funds rate by the end of 2024 to be 5.1%. In June, so the one before, we expected the Fed funds rate to be about 4.6% in 2024. Well, right now, by December of 2024, the markets are pricing in the Fed funds rate will be between 4 and 4.25%. So based on what we heard in September, that is way lower than where the Fed was at in September. That would be even lower than where the Fed was at for their June summary of economic projections. So this is very important. What does the Fed think? Do they think they're only going to cut rates twice in 2024 still? Are they still expecting the Fed funds rate around 5.1% for the end of 2024? Or do they expect the Fed funds rate to be 4% by the end of 2024? That would be what I would call confirmation. If the Fed does not confirm the markets are correct in pricing in 5 rate cuts in 2024, you're going to have a colossal problem on our hands. And that will be terrible news for stocks. To the contrary, if the Fed starts to be in alignment with what markets are currently pricing in, that's going to be great news and could, if you will, open the floodgates for money to head back into stocks. Preferably, your best possible outcome here would be the average Fed funds rate, projected rate by the end of 2024, around 4%, where the markets are currently pricing rates will be by December of 2024, and GDP estimates rising for 2024 or staying the same. Because if GDP estimates stay the same or go higher and Fed funds rates go lower, that would just be saying the Fed expects inflation to continue to fall and the economy to hold up. That would be literally the Fed saying they're expecting a soft landing. So based on how the markets have now changed back in September, pricing in 1 to 2 rate cuts, now pricing in 5 rate cuts, we need that confirmation for our markets to hold up. If we don't get that, like I said, we're going to have a colossal problem on our hands. Not a small problem, a colossal problem on our hands. But if the Fed does indicate they're expecting a soft landing, 5 rate cuts in 2024, the economy to hold up, this will be the confirmation that big money is waiting for. You know the term, don't fight the Fed? Well, what the markets are doing right now is fighting the Fed. The Fed said one thing in September. The markets are pricing in a total different thing now. Does the Fed align with what the markets are expecting? If that's the case, then big money, institutional investors, wealth managers, they're going to have a lot more confidence to put money into work in small mid-cap stocks, interest rate sensitive names. This is where Tesla could start to massively outperform, because there's a difference, let's be honest, of buying a small or mid-cap stock or buying a Tesla. Tesla's very interest rate sensitive. Tesla has a lot of growth ahead of it for many years to come. The same in regards to small and mid-cap stocks in that respect, but Tesla is well established, a well-secure company. I seen this comment on one of the videos I put out a couple months ago, that the only way Tesla goes bankrupt is if asteroids simultaneously were to strike Shanghai, Berlin, and Austin. And obviously that's fictitious. That couldn't happen. That wouldn't happen. But that just shows you the degree in which Tesla has solidified itself to be around for the long term. It's not a very speculative investment buying Tesla compared to small and mid-cap companies. There's a lot more safety, if you will, in buying Tesla. Not to say you will guaranteed make money in Tesla, because I'm not a financial advisor and I would never guarantee that in any company. Investing your money is risky, but it's a little less risky, I think any of us would agree, buying Tesla than buying some random small or mid-cap stock out there. This could open the door for outperformance of Tesla stock, and this could last for weeks or months. So the interest rate decision, there's no chance the Fed does anything. The markets are not expecting the Fed to raise or cut coming on Wednesday. But at 2:30 p.m., you're going to get the press conference. So whatever the markets do at 2, well, that will be important. And if you guys want to stay up to date with that, when that news does drop in real time, check out that link down below in the description of this video. You're going to get confirmation pretty much instantly. If you're a part of that community, we will be there to be able to tell you, like, hey, this is either really good or really bad. So consider joining that if you guys would like. But coming at 2:30 p.m., the Fed's going to get asked a lot of questions in regards to the summary of economic projections. So whatever Fed Powell says at 2:30 could also help drive the markets higher or lower. Now, coming on Thursday, you're going to get some data as well that's really all about GDP. So this week, well, last week on Friday, you had the economy, right? Just straight up, how's the economy doing? The labor market. This week, we're going to get CPI and the Fed. And then on Thursday, you're also going to get the GDP, like recession or no recession. So within Friday and this upcoming week, you're going to have a whole 360 view of everything that is important to the markets. There will be a lot of clarity to whether or not we should be buying interest rate sensitive names, or whether we're going into recession, or whether the Fed is going to cut rates 5 times or 2 times. A lot more clarity will come to markets after Thursday. The data we're going to get is retail sales month over month. You're expecting negative 0.1. That's the number we got last month as well. Export prices and import prices month over month, those are expected to be pretty much in line with last month, negative 1% for export prices and negative 0.8% for import prices. Retail sales, exports, and imports, that's basically your entire GDP report right there, or a vast majority of your GDP report right here. So the estimates are definitely going to change per the Atlanta Fed GDP Now tracker, which is estimating 1.2% for your GDP report for Q4. This could go much lower or much higher based on what we get for Thursday's retail sales number and the exports and imports, but mainly retail sales will cause this to move. Now, in regards to Tesla stock, it really doesn't take a genius to figure this one out. Tesla is coiling for an upside move higher. We talked about this in the last video. But Tesla stock is above its 100-day moving average, likely will stay above its 100-day moving average. It's possible Monday you fall under it. Tuesday, you're going to get a big move either higher or lower. My personal opinion is we're probably going to remain Goldilocks in this state of the markets where things are going fine. The Fed is likely to get more dovish from here. Inflation is likely to continue to trade down lower, and your economy is likely to continue to perform okay. That's your best possible outcome right now, and I think that's the outcome that is going to happen. Now, coming on Thursday, really Wednesday with the Fed, but as well on Thursday, that could open the floodgates for more capital to enter our markets. If things go as I expect, it would be perfectly plausible to see Tesla stock break out into the 260s, potentially into the 270s in this week ahead. So I'm actually expecting a huge move higher for Tesla. Well, maybe it's not a huge move for Tesla. If we look at the actual percentage here, that would be to 260, 6.5% move higher. To 270, that would be about an 11% move higher. And that really doesn't seem too unrealistic to me if the data, if the Fed does support what I'm also saying here in this video. I think the Fed is going to be in alignment with the markets. If not, I think you would have had a lot of Fed officials come out already during their speeches and tell us that. They really haven't done that. So that could be a big shocker if they're not expecting, the same thing as the markets. Definitely something to watch out for. And there definitely could be a big downside movement following the Fed. But I think we're kind of on the same page with the Fed at this point. Now, if you take a look at the bubble chart here for the December 15th expiration on Tesla, you can see there's actually more puts than calls on this expiration of 1.15 for your put to call ratio. So there's slightly more puts than calls. Nothing crazy drastic or anything like that. 46.44% of the open interest is calls. 53.56% of the open interest is puts. If you look at the single largest strike, it is the 250 call with open interest of 48,588 with volume of 95,000. So there is the most activity at the 250 call. Now, the 220 put has open interest of 38,000 and the 240 put has open interest of 36,000. That was actually the 245 call has 63,000 for open interest. The 260 call has open interest of 26,000. So a lot of the puts, believe it or not, for this week are pretty low down there, right? The 230 put 17,000 for open interest, 235 put 24,000 for open interest, but there is a lot of sporadic option activity around the 170 put. The 120 put has volume of 20,000 on Friday, of open interest of about 12,000. The 110 put had volume on Friday of 15,000. I don't think these are actually individuals that expect Tesla could move down to 100 or 110, but that is skewing some of the numbers. So close to the money option activity, the calls definitely are winning here. That's obvious. But there is a lot of weird option activity that is like way out the money on the put side, which I think is probably a lot of old hedges that maybe investors had put on in 2022 for 2023 that are now starting to expire or will expire this week. So if you actually look into the option chain itself, you look a little more bullish than bearish. The short position in Tesla stock is also $21.68 billion. So if you do see confirmation this week that we're actually expecting 5 rate cuts, if the Fed confirms this, and the Fed also keeps their GDP estimates for 2024 in line, even if they're slightly lower, not a huge problem. But as long as they're not signaling some form of recession, then I think that does really beg the question, why are you short in Tesla? If we're expecting lower rates and no recession, if the Fed confirms that, that could put some pressure on Tesla shorts to cover on their short positions as well. So definitely something to be watching for in the week ahead. Now, as I have said before, if Tesla can really break out into the 260s, that could fuel a larger rally that would probably take, a couple of weeks, but could send Tesla into the 300s. Now, if we do get this confirmation that I'm expecting from the Fed and inflation is falling, the economy is holding up, we already know that, that could easily send you into the low 230 range, into the 320s or Yeah, into the 300 range. The 320s, the 330s, that is definitely possible. But for this week, I'm expecting a move into the 260s at the bare minimum. As high as 270 really wouldn't surprise me. Now, if you get some kind of downside movement, we've seen a lot of support around 230 and even this 50-day moving average at around $234. So if you did not hold support there, then you're falling back down to about 225. That is where your 200-day moving average is currently at. But I'm not expecting that. I think there's a lot greater chance we go higher from here. How a stock tends to perform, maybe you guys have heard this before, is a stock tends to follow the path of least resistance. And the path of least resistance at this point seems to be for an upside move in Tesla. Good news for the bulls as well. If you are expecting an upside move in this week ahead, the RSI is at 57.73. So there's definitely some room to see a breakout here before you're on the overbought side. The MACD looks pretty good. Recently, you've kind of converged together. You're still bullish. The yellow line is above the blue line, and you're actually starting to widen the gap just a little bit based on what you've seen on Friday when Tesla stock was up about 0.5%. So let me know what your expectations are for the week ahead. How do you think the Fed is going to be on Wednesday? I think that's by far the biggest thing. Again, does the Fed confirm what the markets are pricing in, or does the Fed push back on that? That's probably what is going to cause your biggest move this upcoming week. Let me know what you think, what your expectations are down below in the comment section. Hit the like button, as well as subscribe to the channel if you guys made it to the end of this video. My name is Michael Tyler. Enjoy the rest of your day, and I will see you in the next one.